Welcome everyone, happy Thursday. Thank you all for taking the time to join today's webinar, where we're going to be talking about investing in bourbon and how it offers unique ways to diversify your retirement portfolio. I do have to reference that investment or direct investment into alcoholic beverages is prohibited under the IRS code. But in this instance, investing in distilleries or bourbon-focused funds or companies is actually permitted, it's allowed, and that's what we're going to focus on today. It is top of the hour, and I do want to be respectful of everyone's time, so let's just go ahead and get started. I am Reneika Lightbourne with Advanta IRA, and I'm delighted to be joined by industry specialist and expert Morgan Salsman. She is the founder and owner of Liquid Assets. Welcome, and thank you, Morgan, for being our speaker today.
Thank you for having me. I'm happy to be here.
Absolutely. So Morgan is going to cover some of the fundamentals of investing in bourbon in terms of funds and more background in terms of who she is and what her company does. But before I turn it over, I just want to give you a high-level overview of what self-direction is and how it works, and when you're ready to get started, what to be mindful of. If you have questions, feel free to put those in the question box. We'll answer those as they come up, but also allocate additional time at the end to get those answered for you. Again, I'm Reneika Lightbourne with Advanta IRA. I'm one of the business specialists. I've been with Advanta as an employee since 2019, but I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I both personally and professionally advocate. If you have any questions or you want to kind of do a one-on-one consultation to talk through your scenario, don't hesitate to give me a call or send me an email. Also, too, I always implore visit our website at advantaira.com. It's a great resource. You can also schedule a consultation there with me as well. Just a little housekeeping before we get started. At Advanta, we don't give any tax, legal, or investment advice. All of the information that's presented today is just for educational purposes. As always, we encourage you to consult with your professional team. You want to do your due diligence, so make sure, talk with your attorneys, your CPAs, financial advisors, and so forth before making any investments. So if self-direction is a new concept for you, just a quick takeaway, just to know that any IRA or former employer plan like an old 401k or 403b or TSP type plan qualifies to be self-directed. 2, you're always in control, meaning you get to decide or choose the investment. In this case today, we're focusing on investing in bourbon funds or whiskey-related opportunities. And then, of course, thoroughly just know that all of the income that's generated from the investment flows back into your IRA. But if there's any expenses related to that investment, it's paid out of the IRA. So just a little history about Advanta and who we are. We've been in business for 21 plus years as one of the leading self-directed IRA administrators in the business. Our headquarters is located in Largo, Florida. Advanta has an office in Atlanta, which is where I'm based. While we don't give our clients any tax, legal, or investment advice, our team is comprised of attorneys and also certified IRA service professionals, which is the designation for our respective industry. Again, our headquarters is located in Florida, but we have an office here, but we actually work with clients nationwide. We have close to $3 billion under our administration. One of the things that we really take great pride in at Advanta is being able to provide our clients that concierge style service, and also including great educational content where you have practitioners and experts like Morgan coming in to knowledge share with you. This webinar is recorded, so it will be uploaded onto our YouTube channel and also our video library on our website, typically within 24 to 48 hours. So you can always go there to check out the recording. Also, continue to go to our events page just to see upcoming events and check out our blog. And my colleague Alex hosts our podcast, which is a really good format. So exactly what is a self-directed IRA? Really simply, a self-directed IRA just means that you as the account owner, you're going to have complete control over the retirement funds. You have the ability to diversify outside of the traditional stocks and bonds. A lot of our clients invest in the likes of real estate, precious metals, oil and gas, but today we're doing something a little bit more unique where you get to invest in a bourbon fund. So why do people choose to self-direct? You can look to self-direct for many different reasons. I'll just touch on 3 of them. 1, it's a new source of capital for you. So if you have funds sitting in an old employer plan, or you have an existing IRA and you're looking to invest, instead of taking out a loan or tapping into your rainy day fund, you can actually elect to put those funds to work. And another reason is the ups and downs, the volatility in the stock market. We know with something overseas can impact the stock market, but with diversifying into other assets, whether it's a distillery type fund or a private company or real estate, it allows you to hedge your bets against those ups and downs. And then, of course, the tax benefits, having those rents, those profits, those dividends flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the types of accounts that can be self-directed, it's the ones that you're already familiar with. The term self-directed just simply means that you get to decide what is it that you want to invest in. You're investing in something other than stocks and bonds. With traditional, it's pre-tax or tax-deferred, meaning you're getting the tax break up front. Once you grow that account over time, you take those, you reach retirement age and you take the funds out, you pay taxes at that particular point based on whatever tax bracket you're in. Whereas if it's a Roth IRA, meaning it's after tax or post-tax dollars, you've elected to pay taxes up front, you grow that account over time. As long as you've held that Roth account for at least 5 years, those distributions are tax-free once you reach 59.5. If you are self-employed or you have a side business or you're an entrepreneur, you have other options as well. You can certainly look to self-direct a SEP, simple or solo 401k. A lot of business owners and entrepreneurs specifically like the solo 401k because you have greater flexibility, you have higher contribution limits. So if you want to know more about that, again, don't hesitate to reach out to me. Some smaller or lesser accounts that are still just as important are opening up an educational savings account, for your kids or grandkids, and also having the ability to self-direct an HSA account if you're eligible. You have to have a high deductible HSA medical plan, so check with your plan provider to ensure that. And then, of course, any former employer plan. So again, whether it's an old 401k or TSP or 407, have the ability to move those funds to self-direct. The only thing that you do want to keep in mind is if it's a current employer plan and you're not yet 59.5, most times they'll restrict you from moving those funds. You can certainly inquire to see if they'll make an exception for you to move a portion of those, but if it's a current employer plan and you're not yet 59.5, they'll prevent you. But if it's a former employer plan or you're 59.5 and older, you can move those funds without any issues. In terms of funding the account, in addition to making an annual cash contribution, you have the option to transfer funds from an existing IRA. Say you have an IRA at a Fidelity or a Charles Schwab, you can move as much or as little as you want to or need to make your investment. If you have an old employer plan from a job that you left years ago, you can elect to move those funds over, do a direct rollover of those funds, and there's no tax liabilities for you to do that. We'll be able to guide you through either a transfer or a rollover depending on your situation. And then, of course, the ability to make an annual cash contribution as long as you have earned income. For 2024, the contribution limits are, if you're under the age of 50, you can put in $7,000 in a traditional or Roth. If you're over the age of 50, you can put in an additional $1,000. That's total, not $7,000 in a traditional or $7,000 in a Roth. You can split it however you wish as long as you don't go over that maximum amount. For a SEP IRA, you can contribute up to 25% of your earned income. Same thing with the solo 401k. Again, you essentially get to contribute twice, contribute as an employee, and then also get to match as the employer. So again, great contributions or higher contributions limit with the solo 401k. For an ESA account, it's still $2,000 per year per child. With an HSA, we did see a slight increase where it's $4,150 for an individual or $8,300 for a family plan. So again, just check your plan, medical insurance plan to ensure that you have a high deductible plan. For an HSA, also another thing to keep in mind is if you're over the age of 55 and you have the option to put in an additional $1,000 to catch up. So whenever you're ready to get started and you've done your due diligence or you've reached out to myself or my colleague, the process with us is going to be pretty straightforward. 3 simple steps. Step 1, filling out the paperwork to get your account open with us. You can actually go to our website and fill out the paperwork, mainly the IRA application packet. Once your account is open, you will be assigned a dedicated account manager, someone who's going to be with you for the life of your account with us, who's there to help you, dot those I's, cross those T's. And then 2, funding the account. So it can be a combination of either making an annual cash contribution, transferring from an existing IRA, or doing a direct rollover from a former employer plan. And then finally, step 3, start investing. What is it that you have an interest in? If it's something that Morgan says on the call today that appeals to you, or you have an interest in investing in real estate for notes and mortgages, you essentially have a blank canvas when it comes to self-direction. And with that, I'll go ahead and turn it over to Morgan so she can just knowledge share and tell us about her and what is it that she do.
Thank you so much for having me, Reneika. This has been a great relationship to build with you and several people in your company. So with that, I'll go ahead and get started. So a little bit about me. I grew up in Bardstown, Kentucky, which is the bourbon capital of the world. So I've been around bourbon my entire life. I like to think I've also always been an entrepreneur at heart. I was always fascinated with financing, investing, building businesses, and so much more when I was growing up. When I was in college getting my engineering degree down at the University of Alabama, I was presented with the opportunities to start investing in some bourbon barrels back home. And, I saw this as a great way for me to stay connected to my heritage, as my family has some deep roots in the bourbon country. And then, after a few profitable cycles of buying and selling barrels, the gentleman who had started our original program decided they didn't want to continue with the purchases. They were busy with their other businesses or reaching their retirement age and looking to spend their time with their kids and grandkids rather than starting a whole new business. And I raised my hand and said, this has been fun and very profitable, and I do have the free time to explore this further. What if I take some of our lessons learned, apply them, and build a new program where you no longer have those managerial responsibilities? And from there, LQD Assets was born. With a few minor changes, I was able to increase estimated profit margins and take 9 of our original investors from that program to start investing in my new program. And over a two-year period, we've grown from 9 to 80 investors and have raised roughly $15 million for barrel purchases over the next 4 years. We've built our own storage facilities to store our own barrels. And others while they age, up to 160,000 barrels once we complete this project. We've built several meaning relationships along the way with distillery partners and sourcing brands that allow us to have confidence in this opportunity to continue. I had a full-time engineering job, civil engineering, for the first 18 months or so of building this business, and it was quite a challenge to balance the two. There came a time when both were presenting growth opportunities and at the same time, and I had to choose between the two, and I chose to bet on myself and leave my engineering job to pursue my dream of building a business and becoming an entrepreneur, and it's been off to the races since. At its bare bones, LQD Assets buys, ages, and sells bourbon barrels. So we have a barrel program through which we fund our barrel purchases from the distilleries. We've built the warehouses where we will store them. And we have built some great brand partnerships to be able to offload our inventory as our brand partners' needs grow and change. Reneika, I know you had mentioned there may be some questions along the way, so feel free to interject when those come up. And other than that, I'll just keep on chatting and
Yeah, I did have a question that came in. It says, you mentioned your history on I guess it being part of your family lineage. Can you expand a little bit more on that?
Yeah, absolutely. So one of my great uncles was, a guy who was very intimately involved in Maker's Mark at the beginning. And I've got another one of my great uncles and cousins. Their whole family line had they do stainless steel tanks for distilleries and build those, and have been doing that for generations now. And then my dad has been in the construction industry for his entire life, building distilleries, building storage facilities for them, building relationships. And he was one of the people that got me exposed to the investing program in the first place. So my mom was a big part of tourism in Bardstown when she was, probably around my age. She was helping get the Kentucky Bourbon Festival started. back in Bardstown at the time. So, you know, I grew up with rick houses in my backyard. It smells like mash everywhere you go. And so it's always been something that is, you know, a great memory for me and a phenomenal, you know, place to grow up. And it's just always had a near and dear place in my heart.
Wonderful, wonderful. Our next question is, are you currently located in Kentucky? Is that
So
where this
I live in
distillery is?
Nashville right now, but I'm in Bardstown, you know, once or twice a month. My parents still live there, and that's where our storage facilities are. They're up in Springfield, Kentucky, and all of our distillery partners are based in Kentucky as well.
Okay, thank you. Let's see. It says, I know we are discussing investing in SCRA, but how I assume liquid LQD allows direct funds, meaning in addition to investing IRA funds, can the person also invest personal or invest directly with you?
Yeah, absolutely. The self-directed IRA is an option, but we definitely take personal funds as well. It's really a personal preference. You know, obviously there's benefits to both, and if you'd like to explore the difference between the two, we can definitely schedule a time after the call to dig into that together.
Thank you. Next question is, if you have an existing 401k, can you only transfer part of the asset to Advanta, or would the full amount in the account need to transfer? Then the position are sold, which are taxable if the gains, and then invested in liquid. Okay, so this is a mouthful. Let me just break it down. If you have an existing 401k, meaning it's an old 401k, you have complete discretion to move as much or as little as you want to or need to. I know sometimes with 401ks or old 401ks, if you attempt to move, they'll tell you you have to move everything, but you don't necessarily have to move everything to Advanta. You can move some to a brokerage IRA so you can be in the stock market if that's what you choose, and then just move whatever amount that you want to invest in an alternative asset. So you have complete discretion there. So there's no tax liabilities. As long as you keep it within a qualified retirement account, there's no tax liabilities. If it's coming from an old 401k, they will do some IRS reporting, but Advanta will also report to the IRS. So for example, if you're sending, 10,000 out or 20,000 out, if Advanta received 20,000, Advanta is going to report to the IRS that we received 20,000 of your IRA funds or your retirement funds, and it neutralizes whatever potential tax liabilities would be. And then, of course, once the money is in the actual IRA account itself, you'll work with your Advanta account manager to then proceed to make your investments. So in this case, investing in private shares and LQD assets. Let's see, you're certainly welcome. Next question is, how are distributions handled, monthly, quarterly, etc.? Also, is there a company compounding option?
So distributions are handled every time we make a sale. So it's not like your dividend stocks where you receive a dividend quarterly, annually, etc. You will only receive distributions when we make a barrel sale. And so our traditional hold period is typically 3 to 5 years. So we'll buy the barrel as a new fill barrel at 0 days old, move it to our warehouses where we'll store it for 3 to 5 years. And our ideal time frame is to sell those barrels in that 3 to 5 year age range. So once we do that, then we distribute funds based upon your prorated share of ownership of the particular lot of barrels that is sold, just to make sure that the small players and the large players are both getting to participate in the sale every time, or as often as they can. I mentioned earlier that we have 80 investors, and if we make a barrel sale of less than 80 barrels, obviously not everyone is able to participate in that sale, but this system really allows everyone to kind of gain some momentum, to be able to carry over their prorated shares to ensure that they'll reach that, they'll reach an opportunity to sell that barrel sooner rather than if we would assign barrel numbers necessarily.
Okay, next question that came in, well, two more questions is, can you supply a pro forma for review?
Yeah, so we can definitely connect offline and share information to get you, comfortable with the details.
Okay, next question is, how often do you communicate with your investors? Like, how often is communication sent out?
Yeah, so every time we make a barrel purchase, there's a lot of communication going out to remind you when capital calls are and things of that nature, as well as when we make a barrel sale, those are communicated. I update everyone on the inventory they have and where their accounts sit, how much money we've spent on storage and insurance, etc., twice a year. So you'll get one around June, July, and then one at the end of the year. So that way you're able to keep that in mind for your tax reportings or anything of that nature.
Okay, next question that just came in is who sells the barrels, LQD or the distiller?
So we buy barrels from the distillery. The distillery creates the barrels, they put the liquid in it, and then they sell it to us. We will take them, move them to our warehouse, and then LQD Assets is responsible for selling these barrels. We sell them to what's called a sourcing brand or non-distilling producer. And so those are brands that do not have their own distilleries. So, some very common ones that you may know of are like Blue Run Bourbon or Barrel Bourbon or even Jefferson's Bourbon. They source their product from a distillery. So, they need the opportunity to buy product that's already aged because, a lot of brands don't have the cash flow necessarily to buy and hold stock themselves. We're talking hundreds of thousands of dollars, sometimes millions, depending on the size of your brand. So I like to say we hold the financial responsibility of the aging process so that brands have that money to go out and market their product because, at the end of the day, brands have to build that loyalty and that relationship with the customer to get the bottles off of the shelf. If they're not getting bottles off the shelf, they're not buying barrels from us and we're not buying barrels from the distillery. So we have to keep that in mind every opportunity we get to make sure that the whole cycle is being seen all the way through.
Okay, a couple questions that came in. It says, what is the minimum investment?
So the minimum investment right now is $20,000 a year for 4 years, with an option as well to do a one-time investment as long as it exceeds $100,000. And our average investment right now sits around $50,000 a year for a total of $200,000 over the lifetime of the cycle.
Okay, next question is there a presentation or slides we can download or is there just Q&A? So Morgan, I know you're going to provide me with.
Yes, yep, we've got a marketing package that I will share. You can distribute this however you would need. You can also download it from our website, lqdassets.com. Sorry, lqdassets.co, not .com. And you can get that investor packet downloaded from there. You can also input your information if you're interested in setting up a conversation, and we can dig into the details there.
Okay, next question is when is the 20K pulled per year?
So we have 2 capital calls a year. One is in the spring and one is in the fall. And so depending on when we get your paperwork done, that will determine which investment opportunity you get to participate in. This is also an opportunity for accredited investors only. So that is a big part of our vetting process. It's really the only requirement when it comes to becoming part of this. So, the accreditation is something that we will review. That's part of the process. So our next upcoming capital call will be August 1st. So we're quickly approaching that deadline. So if you are interested in exploring this, let's get that conversation going now so we can make sure you're comfortable to get your paperwork signed and ready to go. We're down to about our last 10% of availability for this year. So that door is closing quickly and I'd love to talk to you further.
Okay, more questions that are popping in. Great questions, keep them coming. It says for private funds, is this K1 or 1099? I know from an IRA perspective, typically it would be a K1.
This is a 1099 for us.
Okay.
Yeah.
All right, the next question is, go ahead, I'm sorry.
Because of that, sorry, let me elaborate. And because of that, you're going to be able to claim capital gains on this rather than ordinary income. Usually with a K1, you have, some sort of ownership in the business. And this is not that. This is an investment. You're investing into the company as an investment vehicle rather than necessarily a partnership or ownership in the company or an equity stake.
Okay, and then just to kind of reiterate with, obviously with if you're using IRA funds, then you're not subject to capital gains. So just be mindful of that,
Right.
Whether you're investing personally or through a retirement account. The next question that just came in, it says, are the two capital calls split equally?
No, so the capital calls, you will not participate in both of them most likely unless your funds that you invest are over $100,000 a year. So when you reach that $100,000 threshold a year, we'll give you the option to split into both of them if you want. The different capital calls are contracts with different distilleries. And so that's really what makes that decision. It's what's available at the time of your investment, what is the timing of your investment, as well as what your capital investment is. So that kind of helps us decide where you're going to fall into the schedule.
Okay, a couple more questions that came in, but I want to give you time if you have more information you wanted to just kind of present or go through.
Yeah.
Okay.
Yeah. Keep the questions coming, and once those slow down, I've got plenty more things I can talk about.
Okay, one of the other question is, can you give an overview of like the market growth in terms of, it says, what is the average annual return for investing for your investors? And can you talk about the whiskey market growth?
Yeah, so obviously through the pandemic, whiskey growth grew and grew and grew and grew, and it reached probably the absolute peak we will see it at in my lifetime. And so it's leveled back out a little bit, which is something that we are excited about because it really allows us to have dependable data, whereas those 4 years, 3 years during the pandemic, were really outliers. It was a very extreme case, and so now we're back down to these reasonable pricing, reasonable expectations. And so, even during the pandemic, we were seeing 50, 60, 70% annualized returns on our investment, which is phenomenal. However, we do not anticipate those will remain, but we do anticipate we will be able to sustain a 20 to 30% annualized return on your investment, which is still significantly outperforming the majority of other investment opportunities that you have.
Okay, that's it for questions right now.
Awesome. Well, I'll kind of talk a little bit more about, the value of a company like LQD Assets in the industry. So, when a distillery is starting up, they really look to build their portfolio. They're starting with 0-year-old product. If they're going to put out a brand, they're going to want some older product, whether that's 4, 5, 6, 7-year-old. They might source it from somewhere else. They could buy from somebody like us to help get their brand started, but eventually they're going to want to put their own product in a bottle. However, while they're growing, they do need revenue generating streams to be able to continue their growth. So that is why companies like us get the opportunity to purchase new fill barrels. It puts revenue on the books of the distillery while they're growing, or it could even be a long-term revenue stream that they plan to have. There are several distilleries out there that do have what's called a contract distilling program, and that's what we participate in. So we'll contract distill with them. We tell them the mash bills we want, the quantity we want to purchase, and then we'll take those down. Sometimes they'll let us keep them at their distillery, but because this industry is growing so quickly, storage is becoming limited because the distilleries may be able to increase their distilling capacity, but they might not be able to build their storage facilities as quickly as they can increase their storage capacity. So, it's creating a rise in cost of storage. So when we saw this cycle begin to happen, we decided we were going to go build our own storage facilities so we can standardize and maintain our own storage rates. And so, that has proven to have been a great decision for us because through our distillery partnerships, we've seen the prices start to raise. And we got to get ahead of that. So that's great for us. And they're also, when contracts are ending on the storage side, they may not have the opportunity to renew them because the space is so limited. And as the inventory grows, they've got to start having that cyclical process of moving barrels out to be able to continue to put the new fill barrels in. And it's such a long process. Like I said, you're holding barrels for 3, 4, 5, 6, 7 years. And, it's sometimes hard to necessarily balance that. So on the front side, we're really providing value for the distilleries by alleviating the responsibility of storage for them. We're also putting revenue on their books by taking barrels right off of the still, storing them ourselves, taking ownership possession of them, putting cash in their pocket. then it's our responsibility to build those partnerships with those brands. Ideally, we're doing futures contracts with them. We're working with them to say, hey, what's your brand plan for the next 3 to 5 years? What mash bills are you wanting to look for? Does that fit into our profile? Can we buy these barrels for you? And then we put it under contract for you to buy, at that 3 or 4 year mark, whatever age you're wanting to put the product out as. So that really allows us to, plan for the future and also help brands plan for the future. And so, like I said earlier, we hold the financial responsibility of the aging process for them so that they can know they have this product as they get to grow their brand, as they get to put out new SKUs, all of those, kinds of things.
Okay, a couple questions just came in. It says, how many warehouses do you have?
Right now we have one open and it holds about 20,000 barrels. We've broken ground on the second that holds about 37,000 barrels, and the whole campus will hold about 160,000 barrels, and it'll be 5 buildings.
Okay. Next question is, who purchased the empty barrels?
So typically the empty barrels, so on the front end, the barrels usually come through the distillery. The distilleries have great contracts with cooperages to buy new oak barrels. So for bourbon, it has to be a never before used new oak charred barrel. So the distilleries usually provide the new oak barrels. We've done it where we provide our own before, and we just have our own contracts, have them shipped to the distillery for them to fill. On the back end, when we sell the barrels to the brands full of liquid, those barrels are at the discretion of the brand. So if the brand decides to reuse them, repurpose them for another project, doing a double oaking, or putting another type of spirit in it, gin, whatever it may be, they can do that as well. Or we do provide them with opportunities to resell that barrel to some of our partners that buy used barrels on a regular basis as well.
Okay, one of the other questions that just came in, it says, so the distiller is not the same as the brand that eventually gets the barrels?
Yes, not necessarily. So, like I said earlier, there's what's called a sourcing brand. A sourcing brand is they source all of their product from somebody like us. They could go to a distillery, but a lot of times they cannot go directly to the distillery because they can't meet their minimum order quantities. So, if a brand is looking to buy 10, 15 barrels, that is not a great relationship necessarily for a distillery because they are looking for people to buy in bulk. And so we are buying in bulk, but selling in smaller quantities. So that also allows the brands to get something that's more palatable for them in terms of an investment. They can buy those smaller quantities of barrels from us. Occasionally, we may have a distillery come to us and buy some barrels. If they're a new distillery starting their own brand, they may not have the inventory, like I mentioned earlier, that's aged. But they could also have a subsidizing that they need. Maybe they had a product sell much better than they anticipated and they need to subsidize and continue to put that product out. There's a lot of different options for that, but typically it's distillery, somebody like us, and then a sourcing brand. And that's kind of the sale process.
Okay, question is, approximately how many bottles is filled from 57,000 barrels?
From 57,000?
Yes.
Let me do some math for you. 57,000 barrels at 4 years old, at barrel proof. I would say you could probably get close to 11 million bottles out of that. That's assuming you're not proofing it down, assuming you're not, making any other changes to it. And that takes into account, a general number of what's called angel share. So angel share is the percentage of barrels that evaporate, or the percentage of the liquid in the barrel that evaporates over time. And that is a huge piece of the equation. You really can't predict it. There are estimates that we use to guess, we can anticipate, this is roughly what we would see in terms of evaporation. But that's a rough estimate, with doing some quick math.
Okay, question is, what are costs involved to investors?
Say that again.
It says, what are costs involved to investors? I don't know if you want them to elaborate a little bit more, but it says, what is the cost involved to investors?
Yeah, absolutely. So, You're going to pay for the purchase price of the barrel. That's the first thing. And then you're going to have your storage and insurance and what's called ad valorem tax that you'll pay for. Ad valorem tax is a fee that you pay to the state or the county or the city based upon your ownership of these barrels while they're aging. It's a tax that we've had in Kentucky for, decades. And, it's a small percentage, but when you're talking hundreds of thousands of barrels, that can add up pretty quickly. But those are the three costs that you'll really see associated with your investment, along with a management fee that you pay to my company, which is, we can dig into the details of that later once we get on a call to kind of hash out the details.
Okay, question that just popped in is, who does the quality testing? How do you know that liquid is not buying a good barrel?
Yeah, so when we sell our barrels to brands, they will get samples, and so they can do their own quality testing if they'd like. We'll let them come to the distillery, or sorry, to the storage facility and test the barrels if they'd like. We have a lot of confidence in the partners that we've been working with, and they do a ton of quality control when they are distilling the product. We've been working with them for 5 years now, and we have strong confidence that they are putting out great products. Their reputation says a lot. One of our distilling partners just got International Whiskey Sourcing Partner of the Year. They have several awarded brands that they work with, from the Ascot Awards and the San Francisco Spirits Awards that have just come out recently. So there is strong confidence in their ability to do their quality testing on the front end, and then the opportunities for quality testing on the back end are the responsibility of the brands.
Okay, thank you. That's it for questions for now, I think. Wait, another one just popped in. It says, how would you compare your company to MGP? Are they a competitor of yours?
MGP, I would not consider a competitor of ours. They are a distillery, so we can buy barrels from them. I've sourced from them many times. They are great partners to us, and we have a lot of confidence in their ability to put out good liquid. I source for brands outside of our inventory. So I think I mentioned earlier, we've got about 5,500 barrels in our inventory today. But if a brand comes to me and says, I know exactly what I want, it's not necessarily in your inventory, I have the accessibility to, through my partners in the industry, through our distillery partners, to be able to get those products for the brand, even if it's not something we own currently. I would not consider them a competitor necessarily. I would consider them a partner in this industry.
Okay, a couple more questions that just popped in is this an open-ended fund and contract for 4 years, or are you on one fund and will soon, I'm sorry, my computer just popped, or you on the fund, I'm sorry, let me start over. It says, is this an open-end fund, ended fund and contract for 4 years, or are you on one fund and will soon move to the next?
It's a closed fund, but it's 4 years long. So you will, when you sign your contract, you're signing that you will invest $20,000 a year for 4 years, but you are on the same fund throughout from beginning to end.
Okay. That's it for questions.
Awesome. Well, I mean, I can continue to talk about, our warehouses and some more details on that. I know that's been asked. For me, it was the last project I got to do as a civil engineer, so that was really, really fun for me. I got to help design this before I transitioned into the space full time. So our warehouses are about 40,000 square feet. They hold about 37,000 barrels. And I think I mentioned earlier, the whole site will hold, roughly 160,000 barrels. It's in Springfield, Kentucky, and, right in the middle of, what I call bourbon country. I mean, there's distilleries within, 10 miles in pretty much every direction that you're working with. And it's a really centralized location. Typically we have, pallets stacked about 6 high, 4 barrels to a pallet. And, we have been continuing to grow. We do store other partners in our warehouses as well. Although it is primarily for us, we have plenty of space to bring in other customers. So a lot of opportunity there to build new relationships with brands that need storage, to build a relationship with distilleries that need storage permanently or temporarily. And it's really a great relationship builder for us as well.
Okay, a couple more questions just popped in. It says, but if we fund in August, what fund will we be in, meaning beginning or end?
You'll be in the beginning.
Okay. Next question
You would
is,
be in year one of your commitment for 4 years.
okay,
And again, if you want to dig into this one, I think that might be better to be talked about offline.
okay, it says, if we invest, can we visit the warehouse? So do you
Yeah,
do like
absolutely.
investors?
Yep.
Okay,
We'll do visits. Usually we have an opportunity where we schedule, there's a couple time slots. You can come visit them. You just have to sign up for that. It gives the investors an opportunity to meet each other, maybe even visit the distillery. Usually we have a couple opportunities like that a year.
okay. It says, can you invest the 80,000 all at once, or or it must be over 4 years?
You can do a one-time investment as long as it exceeds $100,000.
Okay. Next question is says, my apologies if this was already covered. I joined late. So 80,000 total investment over 4 years. What is the expected ROI for your investors?
We anticipate that they will see 20 to 30% annualized returns on their investment. So that will be compounding.
Okay, but it's at 100,000 and not 80,000, correct?
Yes, at the one-time commitment. Yep.
Okay. Question is, what type of insurance do you carry? Like how?
Yeah, so there's insurances on multiple levels. So I obviously have insurance on my business, LQD Assets, as an entity. The barrels have their own insurance, for disasters, theft, things of that nature. And then obviously the storage facilities have their own insurance as well for damage. And then on top of that, the entity that owns the warehouses has insurance. So lots of insurance to cover this, but the insurance on the particular barrels is the responsibility of the investor. We provide it, the investor just pays for it.
Okay, something just popped in. It's not a question, but just more so giving you feedback, which is great. It says, no, not a question, great info, and we'll schedule a call to discuss further. So that's
Great.
someone in the
I look
audience.
forward to
Absolutely.
Let me share on that note. I'll share my contact information so that way, you're happy. I'm more than happy to work through the website if you'd like. The website is lqdassets.co. You can reach out to me directly at Morgan, Morgan Salsman, Salsman at lqdassets.co. Or you can reach out to me via phone at 502-827-8089.
Also, too, on my presentation, I might have my contact information, but I also have Morgan's phone number and also her website as well. So feel free to take note of that. It says, will the recording be available? Yes, so this will be uploaded onto our YouTube channel and also our video library on our website, typically within 24 to 48 hours, more likely later today, so it will be available for you. Another question that came in, so yes, Morgan will provide me a copy of the marketing presentation. I'll be able to share with you. You can just send me a quick email and I can reply back with that. If you have any additional questions, it says, wait, something just popped in. Any loans required for your business?
No.
It says, what does a down market in the bourbon in the bourbon investing industry looks like?
So the bourbon industry operates on supply and demand, 100%, just like every other industry does. It does operate on different indicators than the stock market because it's really working on, consumers. Are consumers consuming alcohol? And so, I like to say when times are good, people drink, but when times are bad, people drink even more. So there really is, in the past, there's been great confidence that, even when the economy downturns, the alcohol space typically, remains very steady.
I understood. I know we're, just a few minutes out. Do you have any parting words or anything else that you want to share with the audience?
No, I mean, like I said, I'm looking forward to chatting with you all, answering any more of your questions offline and getting to know you. Other than that, I've kind of checked all my boxes and shared all the information I shared or came to share today. So other than that, I really appreciate the time.
Thank you so much, Morgan. Thank you all for the questions listening in. Again, if you have any specific question relating to Bourbon investing, feel free to reach out to Morgan. Going to her website at liquidlqdassets.co or giving her a call. Or if you want to know more about self-directed IRAs, or you want to, again, talk through your exact situation relating to using qualified retirement funds, feel free to give me a call or send me an email. I'm happy to help. With that, I do want to tell you all, have a great holiday weekend. This is a long weekend coming up, so I appreciate you guys taking the time to join this webinar, and happy investing, everyone.
Thank you very much, Reneika.
You're certainly welcome. Have a good one, everyone.